Market conditions remaining bearish in this bull market and continuing to accelerate to the downside, sitting at some significant support areas. So we'll take some time and look at that today. We're seeing a momentum which is now down towards the extreme end of that range. You can see that on the chart right here, all the way back down under this support area now. And you can see the S&P 500 chart pattern here as it's just working on that retracement. We're back to about that 500 level. Breadth also seeing some acceleration to the downside, but kind of pausing right here. We've seen that pause in the buy-sell ratio here the last 3 days as well. We'll look at that chart here shortly. Sentiment indicator also towards the upper end of that range. Recall that when we see sentiment still high like this and we're seeing momentum in this pullback and we've had a really strong uptrend and we are still in this bull market. That's the bull market part of this analysis, is this long-term trend is still up. We're just pulling back inside of that, or at least that's the early indication right now. We still need to see some support. Whether that overall uptrend will continue or not is yet to be determined. We are at the extreme range on buy-sell ratio. You can see that as these start to get wide like this early on in that trend, that's typically the beginning of downside or more downside to come. But that being said, we are extreme in this area, so we're extreme across sentiment as well to the downside, and that could create some support right here at these levels. If we look at S&P 500, we're sitting right at this support area, and we have this also the support area right at the 236 inside the momentum zone, and we're seeing now what we need to see is a little bit of confirmation right here on SPY. We need to see some buying. We haven't seen that yet. We're just continually seeing these down days, and that's across the board. That's on the triple Qs as well, which is starting to break down, or at least going to retest this range. Remember that these are ranges, these are zones. Even though this says a price point right here, it's still going to be a range that we could see some activity. And we're extreme to the downside here as well on triple Qs and the diamonds DIA, which is the ETF for the Dow Jones Industrial Average. This one actually has broken down through that level. It's interesting to see. You can see that little topping tail bar right there where you had the open. It touched that level and then it ended up closing lower and creating that bar that looks like this. That's a bearish day where you have resistance. So it's reacting across these levels. That's one thing we talked about here at the Dow now, where we're getting some of the support areas that have been broken. Now we're going to act as resistance, and the Dow has actually accelerated. It was really the first one out in this rally to start moving, and now it's the first to start to show some weakness here as well. We do have a real big chunk of major support happening right here. So if we were to drag that across the board here, we're going to see inside of that 382 some major support happening here as well. And we're not as extreme as the other indices here, but we are extreme to the downside, and we want to see if we get any support here at these levels. I thought this was interesting. If you go to the index scan and take a look at those 15 stocks that are in the S&P 500, just the leaders that are still maintaining, that are holding up, Progressive, Google. It's interesting that there are 3 airlines in here: United Airlines, Alaska Air, and there was one other one I thought, Delta Air. Yeah, Delta Airlines right here. Freeport, United Health, Parts, Lockheed Martin, Gold, Energy. Okay, those are the ones that are holding up in the S&P 500. And I just simply went to the index tab and then that 15, clicked on that 15 of those leaders. Those are the leading stocks at this moment that are continuing to hold up, at least in the S&P 500. If we look at the sectors, we're seeing sectors really broad-based across the board. We did see a little shift here in a couple of trends. Consumer utilities getting a new uptrend, and consumer goods also getting a new uptrend here. So let's take a look at those charts. A little bit of a bounce right here on consumer goods. Again, consumer goods are a defensive trade, like food and toilet paper and soap and toothbrushes and some things like that. We'll continue to use in any kind of economic environment. Same with utilities, also getting a little bit of a bump there. So we may see some trends shifting early here, at least the early sign of some buying and where that money is going to. Commodities, look at commodities right here, and we're continuing to see these, the gold continue to work. Hasn't had much of a retracement, solid into that buy uptrending zone. Had a couple of bounces bounces back here at that 214 level on GLD. Oil, though, is bouncing or selling off and finding some support. This is the area where we want to see it hold up right here, retracement, but back down, finding the support, and then ultimately continuing that overall trend. This is the place that it's got to start to hold some support. We'll see if that is the case in USO for today. Some of the muscle stocks to consider, we're seeing GCT, which has been a big, a high-flying stock before this retracement, and getting a little bit of a confirmation there. We'll see nothing super, confirming that level. It's still got to break up above that level, so nothing too fantastic on that chart. We're seeing energy stocks here, just some of those retracements, pull the market pulling those down, but you're getting some good ideas. Some of these names that still look like they want to make an attempt at going higher are showing up in that muscle stocks group. That will do it for today's update. Everyone have a fantastic day today.